Hi, I'd like to welcome everyone to our class. This is our Getting Started in Forex online class. My name is Kelly Durazo. I'll be your instructor for today's class. First, before we actually begin our class, I do need to go ahead and read a few disclaimers, so we're going to do that first. Now, again, welcome to our class. This is our Getting Started in Forex class. For the next few minutes, we're going to be covering quite a few different topics about the Forex market. Some of the topics that we'll be discussing in this class are first, we're going to start with the basic terminology and key concepts of the Forex market. Now, I always say that learning the Forex market is kind of like learning new language. So we're going to get into some basic terms when discussing Forex. And then we are going to develop a basic trading strategy that you can start using in the market right away. Now, there are quite a few different strategies that you can use to trade this market. This is just one of many, but however, this is a great one because anyone from the beginner level to the advanced level can and does use this strategy. It's really one of those universal type strategies, and you'll be able to walk away today with this particular strategy under your belt. And then last, we're going to talk about some advanced trading tools and educational offerings that Forex.com offers to their clients. So to begin with, when we're talking about Forex, what are we talking about? Exactly what is Forex? Now, Forex is short for foreign exchange, and what this is basically the buying of one currency while simultaneously selling another currency and then vice versa. Now, something to compare it to that you may be familiar with is that it is very similar to going to another country and exchanging your money for another currency. Now, as far as the size of this market goes, Forex is the largest financial market in the world with upwards of $3 trillion being traded each and every day. In fact, if you took a few markets, combine those together, a couple of those being the New York Stock Exchange, the NASDAQ, two very popular known types of markets, it still wouldn't equal the trading volume that we see in Forex on a daily basis. So again, a very large market that we are discussing here. Now, in Forex, currencies are traded in pairs, so let's get into some of that Forex terminology that I mentioned. And each currency pair consists of a base currency, and then you have the counter currency. The base currency, this is the currency listed first in the pair. This is the currency that we're performing the trade action with. So here we're looking at euro dollar. Euro is that base currency since it's listed first. And then we have that counter currency being the second currency listed in the pair. This is the currency that the exchange rate is quoted in. In this case, US dollar is that counter currency since it is listed second. Now we have quite a few different currency pairs that you'll have the option of trading in this market. We do offer over 50 different currency pairs. I do want to draw your attention to 6 of those currency pairs, and these are what are referred to as the majors. And as you're looking at these currency pairs, you're going to notice that they all involve one specific currency, and that is the US dollar. So here we're looking at euro dollar, dollar yen, we have the pound dollar, the dollar Swiss franc, the Australian dollar, and the New Zealand dollar. So these 6 currency pairs alone make up 85% of all daily transactions. So as you can see, these are some of the favorite currency pairs, again, very highly traded in this market. But like I said, you are going to have your choice of many more currency pairs. Here's a few other. These are what are referred to as cross-currency pairs. As you can see, none of these involve the US dollar. However, each time that you place that trade, you're going to be able to pick and choose as to which currency pair that you want to place that trade on. Now, as I said, this is a very large market. It continues to expand and grow all the time. So what are some of the benefits of trading this market? What really makes it very unique and just a great overall market to be able to have access to and to trade? Well, first of all, it is a 24-hour-a-day market. So this is a continuous global market with a brief break in trading over the weekend, but virtually the market opens Sunday afternoon at 5 p.m. Eastern Time, and it's open 24 hours a day throughout the week until the close of the market, which is Friday at 5 p.m. Eastern Time. So again, giving people a lot of opportunity to trade no matter where they are in the world or how much time they actually have to trade. So you're going to be able to create your own trading schedule. As far as the cost goes to trade this market, it's a very low transaction cost. Now, we don't charge any commission fees, no monthly fees just for having that account open. You're going to pay what's called the spread, and this is per trade that you elect to get into. And the spread is the difference between the bid and the ask price. And we'll go through an example of this in just a moment. Now, there are opportunities in both rising and falling markets. So what does this mean exactly? Well, this means that you can just as easily get into the market going either direction, whether it's buying or selling. So if the currency is going up, we can buy it. If it's going down, we can sell it. We're not stuck going one way or one position on our trades. And you can get up to 200 to 1 leverage. This is depending on which type of account that you're trading. There's going to be two that we offer that we'll talk about. But speaking to leverage, now this is a term you'll hear a lot in this market. So I want to give you just a very basic explanation just to make it a little bit easier for you to understand what it means to be able to leverage in the Forex market. So very simply, this is giving you the ability to trade large dollar amounts with a comparatively small amount of trading capital that us as the traders are going to have in our account. This is what allows us to place those very large trades in this market. Just keep in mind, though, that leverage can be a positive. It can increase potential profits. However, it can also be a risk and can increase potential losses as well. And we're going to talk about that leveraging in a little bit more detail in just a moment. I'm going to show you another example of that. Now let's go ahead and talk about the three major trading sessions that are going to make up the majority of currency trading volume that's taking place. And as you look at the opening times of these sessions, now you're going to get a really good feel as to when this market is open and available to you. So here we have the Tokyo session, which begins at 7 p.m. And then as that's winding down, then that London session will pick up. That's going to begin at 3 a.m. And then that New York session will begin at 8 a.m. So the London session will overlap the New York session just by a few hours. And then that New York session will begin at 8 a.m. These are all Eastern times that you're seeing here. But again, as you're looking at the opening times, now you can see how no matter where you live in the world or what time of the day, late night, early morning that you want to trade, there's going to be a session, a market open for you. It doesn't matter where you live, you can trade any or all of these different sessions, again, lending to the flexibility and convenience of when you're able to trade this market. Now, each currency price has two parts to it. There's what's called the bid price and the ask price. The bid price is always lower than the ask price. Now, the bid price is where you're able to sell the pair. The ask price is where you're able to buy the currency pair. So what you're seeing here in front of you is a screenshot of one of our dealing boxes on our trading platform. First, we can see the currency pair that's listed. We're looking at euro dollar. And then right below that, we see two buttons that say sell and buy. So the one on the left that says sell, this is what we call the bid price. So if we wanted to sell euro right now, we could just click that button on the left, immediately be into the market, being given the bid price selling euro. If we wanted to buy euro, we could click that button on the right. We'd be buying euro. We would be given the ask price immediately there, buying euro in this market. Now let's talk a little bit more about the spread. Remember I said Forex.com doesn't charge any commissions for their clients. They are actually making their commission on the spread. So we're going to be looking at the buy and the sell price again, as you can see that right in front of you. And you're looking at a difference of a price there. And that difference that you're seeing, that's what's called the spread. So in this case, the ask and the bid price, the difference between both of those is 1.9. So in this case, whether we wanted to buy or sell euro dollar, we would pay the spread here of 1.9. And more specifically, we're going to pay in pips, 1.9 pips. Now that term pip, that is a term that you'll hear a lot in this market. It is a term that you do want to be familiar with as well. So let's just talk about what a pip is and then the value of a pip. So in Forex, the term pip is used to measure the movement of the exchange rate, and it normally refers to a basis point value that's 4 places to the right of the decimal point. So depending on what account size that you're trading Each pip will either be worth approximately $1 in a mini account or approximately $10 in a standard account. So I'm going to go ahead and show you a couple examples of that. Now let's just say that euro dollar is at 1.4616.2, and then let's say that it goes to 1.4617.2. In this example, we can see that euro dollar has gone up 1 pip. So if we're trading a mini account, that 1 pip movement is going to represent approximately $1 to us. If we're trading a standard account, that 1 pip movement is going to represent approximately $10 to us. Now let's look at another example here. And this time, let's say that euro dollar is at 1.4626.2, and then let's say that it goes to 1.4601.2. So in this example, we can see that euro dollar went the other way. It went down 25 pips. So we're trading a mini account. That 25 pip movement is going to represent approximately $25 to us. If we're trading a standard account, that 25 pip movement is going to represent approximately $250 to us. So now let's talk about those two different types of accounts that you can trade, and let's just talk about the differences of each. We're going to go ahead and start with our standard account. Now, regardless of which type of account that you're trading, we're always going to be trading in what we call lots. Lots are simply a unit of measurement for those transactions. We can place one lot on the trade, possibly up to 10 lots on the trade if we're meeting the margin requirement. We'll talk about that. And with the standard account, we're specifically trading in lot sizes of 100,000, leveraging up to 200 to 1. So let's go ahead and go back to that leveraging a little bit. Now we're trading in lot sizes of 100,000, but due to that leveraging, this means that we don't have to have $100,000 in our trading account to be able to trade that one lot. What we need to have in our account is 1% of the value of the position. What's the value of the position with one lot? It's 100,000. 1% of that is 1,000. So approximately $1,000 in our trading account is going to allow us to trade that one lot in the market. If we have $2,000, we can trade 2 lots and then so on. That's what it means when we're able to leverage that percentage, that 1%. This is our margin requirement, the required amount that we need to have in our account that allows us to place these very large trades. Now, we also have our mini account. And our mini account, you would just want to think of that as basically a scaled down version of the standard account, trading in lot sizes a little bit smaller, 10,000 compared to that 100,000. Pips in this type of account, approximately $1. So again, using that leveraging here, every $50 in our trading account is going to allow us to trade that one lot in the market. If we have $100, we can trade 2 lots and then so on. Now, these are both great accounts to trade, and you're going to be able to pick and choose as to which type of account that you want to trade. Now, of course, we do need a way to access the market. So we're going to do this by using our Forex Trader Pro. This is the trading platform that you'll be using, absolutely free to use. And you want to think of this, again, as your gateway into the market. And we do offer a few different versions just to make it very convenient for you. First, we have our Forex Trader Pro for Windows. This is one of our most advanced platforms, very user-friendly. You can customize it, very easy to use overall. You're simply going to download that and access it by clicking on the icon for it on your desktop. And then we have a nice convenient web-based version. Now this is nice if you're using maybe someone else's computer, you're not at your own computer yet you still want to do a little trading or just look at the market. This is going to allow you to access the market without having to download the trading platform on that computer that you're using. Now we also have our mobile versions. These have become quite popular, very, very convenient. This is a free application that you'll download to a device such as an iPhone, iPad, Android, any of those web-based devices. That way, if you're on the go, if you're traveling, if you have an appointment that comes up, you can still do your trading. And really between all of these different versions, we do have a way to trade this market from just about anywhere that we are. Okay, so now we're going to go ahead and get into our trading strategy. So I talked about that in the beginning. Again, there are quite a few different strategies that you can use to trade this market. This is a great one, a very popular one. Anyone from the beginner level up to the advanced level uses this particular strategy. And to analyze the market, though, we're going to be looking at some charts using some very specific type of analysis. Now, when you're analyzing this market, trading the Forex market, there's a couple types of analysis you can use. You can use fundamental analysis or technical analysis, or you can use a combination of both of those. Now, fundamental analysis, let's just talk about what fundamentalists do. Now, fundamentalists are going to study the cause of market movement. So this is going to include a lot of different economic data reports that are constantly coming out 24 hours a day throughout the week. They're going to really be watching those reports and analyzing those numbers to really help them make their trade decisions. Now, some of those reports that come out are what we call more key major announcements, meaning that when those numbers come out, they can cause quite a bit of movement in the market. So right now, I'm just going to give you a bit of an introduction to some fundamentals as I go through a few of these key major announcements, starting with non-farm payrolls, what we typically call NFP reports. Now, these rates measure the percentage of unemployed workers within the total population. And this report comes out usually the first Friday of each month, but it is typically a very big market mover with quite a bit of activity associated with it. Then we have the GDP, the gross domestic product. This is the total economic output of a country. The FOMC, Fed minutes, interest rate announcements, consumer price index, and producer price index, both of those being a primary indication of inflation. Inflation is generally associated with a falling or a weakening of a currency. Now, just a few more here. These are some business reports. We have retail sales, ISM manufacturing, and industrial production. Like I said, giving you just a bit of an introduction to some of those fundamentals. But if you would like to learn a little bit more about the fundamentals, it may be something you gradually learn along the way. We do provide quite a few different educational platforms and webinars directly on our website that will really help you understand the fundamental side of trading this market. Now, the other type of analysis that we can do is what we call technical analysis. So a technician is going to study the effect of those fundamentals. They may even try to follow the trend once those fundamentals have put the trend in motion. For this presentation, we are going to focus a little more on technical analysis, as I want to show you that very simple technical trading strategy that you can start using in the market right away. Now, what you're seeing in front of you is just a typical Forex chart that a Forex trader would use. And what we're going to really focus in on is the use of trend lines. And what trend lines are, these are areas of support and resistance. Now, those are two words you will hear a lot in this market. Support being a significant low price area in the market, kind of like a floor area. Resistance is the opposite, a significant high price area in the market, like a ceiling type area. So we're just going to identify these different support and resistance areas. We're going to connect them with a trend line, and that's really going to help us see the overall direction that this currency pair is moving. Now let me get my pointer on here so you can see exactly where I'm at. And starting at the beginning of our chart, we can see that those low prices are getting higher. We can also see that those high prices are getting higher. So we want to identify those support areas, those low price areas. So what we see is we see that the prices rallied to this high price area here, and then we see those prices drop, what we commonly refer to as a retracement or a pullback. This is the lowest price area that the market was able to pull back to, creating this nice support area. And then we can see that the market rallied up to this high price area here. And then we see again that we have this nice pullback, and the market dropped to this low price level here, creating this nice support or floor type area. Bounced off, went a little higher, and then we have that retracement again. And specifically what you're looking at again is those low prices are getting higher. Those high prices are also getting higher, which is very typical of what we call an uptrend. And what we're going to do in an uptrend is we're going to really focus in on those support areas. We're going to connect them with a trend line, kind of like connecting A to B to C. And when we do that, we can very easily see that this currency pair is definitely trending up. Now, what goes up will eventually come down. So the second way that the market can move is giving us a downtrend. With a downtrend, we see those high prices are getting lower, and we see that those low prices are getting lower. However, with a downtrend, we're really going to focus more on those resistance areas. By doing that, again, we can very easily see that this currency pair is definitely trending down. Now, the third and final way that the market can move is when the market starts moving sideways. And that's what we really want to focus in with our trading strategy. And this particular strategy is called the breakout of support or the breakout of resistance. So anytime you see a currency pair starting to move sideways, we really want to focus in to see if this strategy may be setting up. Now here we can see in this currency pair, the market has begun to move sideways here. So we'll just pretend like we're only about at this point right here. And the first thing we want to do is we want to identify that significant support level that the market has created within that sideways movement. So we've identified this level here, drawing this line, connecting those low prices. It's hit it quite a few times. Step number 2, we want to identify our significant resistance level within that sideways movement. We identified this level as being significant. Look at how many times the market came up and hit that same price area over and over. So here is our trading strategy. Again, this is called the breakout strategy. So when the market breaks through either the support or the resistance, because eventually it will, that's when we take a position in the market. That's when we buy or sell, because once it breaks through, it'll many times continue on either up or down. Now here we can see exactly where the market broke through. So when it breaks through, that's when it's time for us to take action. So what we would have done is we would have bought right above that resistance level, anticipating that once the market broke through that it would keep heading north, keep heading up, as we can see that it did. Notice that we had this rally up, and then eventually we had that pullback, that retracement. Now also notice where it retraced to. It's very interesting. The market is creating a new level of support, and that's something very common that we see. We see that the market will oftentimes create new support and resistance levels. We love that, creating more possible trading opportunities for us. But more interestingly, look at where it created that new support. If we go back, we can see that that previous resistance has now become a level of support. If that happens, that's called role reversal. This previous resistance now becoming support, or vice versa if the market was going the other direction. Now, that's really it to our trading strategy. As you can see, very, very simple to learn. We're just waiting for that sideways movement. We identify that significant support. We identify that significant resistance. And then we're just waiting for the breakout. So if it breaks above the resistance, we buy right above that level. If it breaks through the support, we can sell right below that level. Now, if you'd like to learn a little bit more about this strategy, we have a nice webinar called Introduction to Support and Resistance on our website. You can check that out, and that's really going to take you through this strategy in much more detail, show you quite a few different chart examples, and really go through what support and resistance is and this particular strategy, again, with quite a few different charts that you'll be able to see that. Now, moving forward, let's go ahead and talk about how we enter the market. Now, what we're going to do is we're going to be looking at a couple different orders that we commonly use. So we use, again, our Forex Trader trading platform, and we're going to place orders. So we can either use a market order. This lets us get into the market right away at the current market price. Or we can use entry orders that let us get into the market at a predetermined price. So this would be different from our current market price. Now, here's a few different orders that you can use on our trading platform. Again, just different ways to buy and sell to get in and out of those trades. I want to go through this last order with you called the if-then OCO order. I'm just going to briefly demonstrate that. If-then, one cancels other. Now, basically, you can do almost all of your trading with this type of order. So this is what the order box looks like. So the first thing that we would want to do is we want to select the currency pair that we want to trade. And then we want to go ahead and select the order type. So in this case, we're using the if-then OCO order. And then we want to choose one of two options in the expiration box. Now, either we're going to choose end of day. Your order will expire at the end of the trading day if it doesn't activate. That's 5 p.m. Eastern Time. Or we're going to choose the good till canceled. Your order remains active for 90 days unless it executes or you manually go in and then cancel that order out. Now in this box, we want to determine whether we want to buy or sell the currency and then how many lots do you want to place on the trade. So there are really three price levels that we're needing to determine. First, the if portion of the order. This is the order that gets us into the market. This would be our opening position price. And then we want to attach the other two aspects of the order. One is our stop loss order. This is a protective safety order that lets you control the loss should the market turn against your trade. And then we have our limit order. So this is our take profit price. This is where we anticipate the market going to. If it does hit our limit order, it would close out that trade, automatically bank our profit into our account. Now, moving forward, let's go ahead and talk about some great trading tools that we do offer along with a really amazing education program. So we'll go ahead and start with education. And we do have many different educational products to offer for all levels of trading. These include our premium webinars, Learn to Trade Forex, and Learn to Trade Forex 2. Starting with our premium webinars, now these are free to all of our clients. We do host some live ones that are given at various times throughout the week. We have also archived those so that you can listen to them at your convenience if you can't be on when that webinar is scheduled. And then we have an educational program called Learn to Trade Forex. So this is an online curriculum that you'll have 24-hour-a-day access to. And this is nice because it'll give you all the information you need to know to build a pretty solid foundation to trade in the Forex market. This is really nice because you can work at your own pace no matter what your own personal schedule is. And then we also have our Learn to Trade Forex 2 course. So again, self-paced, very interactive online training, really giving you everything you need to know about the market from A to Z, including some really nice downloadable workbooks and quizzes to really test your knowledge and help you understand exactly where you are and maybe what you need to work on. Another one of those great educational programs. Now we also have trading consultations. These are conducted with one of our Forex specialists on a one-on-one basis. So they'll help discuss potential trading opportunities. As you're learning different strategies, they'll help you to develop those. And they're going to answer any questions, whether it's fundamental or technical, really answering any of those Forex questions that you may need help with. And then we also have some really nice trading tools. So let's go through some of those. And these are really going to help just bring your Forex trading to the next level, starting with Forex Charts by eSignal. Now this is an advanced charting package that traders use to view currency charts. You can customize the look and feel of your chart. You can open multiple charts at once in different time frames. And you can save all of your work on it, including all of your price studies and your trend lines. Now, we also have Trading Central. This is a leading award-winning investment research provider. This is updated throughout the trading day, giving you live updated analysis on the market. Offers trading ideas based on charting, technical indicators, candlesticks, and then much more. And then we do have some really nice research tools that are really going to, again, give you a really nice edge to your trading, keep you alerted and updated to what the market's doing. So we have a nice economic calendar for you, again, absolutely free. You want to be very aware of what economic announcements are coming out, and this is going to provide that for you. We also have a weekly strategy that we post, and then we have regular market updates. Now we're going to go ahead and do a live question answer session. So up to this point, I've given you a lot of information about the Forex market. I'm sure that you probably have many questions that you'd like to have answered. So we're going to be doing that portion of our class right now. So if you do have any questions, you can simply type those into the chat box window there at the bottom of your screen. I'm going to go ahead and pause for a moment to allow you to type those in. I'll come right back and we'll get to all of those questions. Okay, we have quite a few questions coming in, so let's go ahead and start our live question answer session. Now, the first question here, and this is a question that we get all the time, what is margin and leveraging? Can you go over that just very briefly for a moment? Of course, again, those are two words you'll hear a lot in this market. Starting with leveraging. Now, leveraging, very simply, again, this is just going to give you the ability to trade large dollar amounts with a comparatively small amount of capital that we have in our account. This is what really allows us to place those trades. So again, let's say that you're trading a standard account. We're trading in lot sizes of 100,000 in a standard account. Even though it's 100,000 we're trading, we don't need to have 100,000 in our account to trade that. That would be leveraging 1 to 1. We know we're able to leverage 200 to 1. So that means that we only need a percentage of that 100,000 to be able to trade that in this market, that being 1%. That's our margin, the required amount that we need to have in our account that allows us to place that trade. 1% of 100,000 is 1,000. So approximately $1,000 will let us trade one lot. It's really an easy way to think of it. It's just the ability to let us trade very large dollar amounts in this market. Are the Forex charts free to use? Yes, all of our Forex charts are free to use, including that free application that you can use on your, PDA, iPhone, Droid, any of those web-based devices. Nice free charts. They do have a live data feed as well, so you are seeing real-time market action as the market's open, as it's moving, and as it's being traded. Do you offer practice accounts? Yes, we absolutely do. And I do encourage everyone to go to our website, www.forex.com/UK. Go to our website and check out and open up a free practice account. Again, those are free. We love free stuff, right? This is going to allow you to download our trading platform. And again, using those nice free practice accounts with the free charts, that will help you really just understand this market, help you to practice in using that trading platform, placing those trades, learning how to buy and sell. And those practice accounts are good for 30 days. So again, I encourage everyone to open up a practice account. Can I make withdrawals from my account, and how is that done? Yes, you can make a withdrawal from your account of funds or profits at any time. It does take 2 business days to process. Keep that in mind if you are making that withdrawal at the end of the week. There is a withdrawal form that you will need to fill out that we make available to you on our website. Each time that you do make that withdrawal, you'll need to fill out that withdrawal request form. How are accounts funded? Well, first of all, there are 3 typical ways you can fund your account. You can use a wire transfer. If you use a wire transfer, just remember there are standard bank fees when making that wire transfer. You can do it by a check or a credit card as well. Do you have other educational webinars? Yes, we do have other educational webinars on our website. Check that out. Usually under the Learn tab, you'll be able to see a lot of different webinars that we do provide that have some great educational material on them. We have a very extensive free glossary. We have some short videos that you can look at, some tutorials. A lot of free education if you just go to our website and look for that. Usually, again, it's under the Learn tab, and you'll be able to see a lot of great education that will really expand your Forex knowledge. Can I move to a standard account later if I open a mini account now? Yes, you can. If you open either a mini or a standard account now, later on, let's say that you practice for a while and you do some trading, and let's say you open a mini account, you want to move to a standard, you can open that at any time. There is a minimum amount for the standard account, so just contact us. Let us know that you want to open up a standard account, and we'll be able to help you along with that. Okay, I don't see any other questions. And if you do have any questions later on, please contact us. You can go right to our website. there is a Forex chat box there. You'll be able to click on that live chat, and one of our Forex specialists are waiting in the wings to answer any questions that you may have via a chat window. You can call us or email us support@forex.com. And with that being said, everyone, it's been a pleasure. I want to thank you again for joining us on our webinar. Have a great day, and we'll see you next time. Bye-bye.